With energy prices and inflation going through the roof, I thought we would look at some parts of the energy market to see whether there's any gains that we can make there. So let's look at a company which fills in the gap within the markets between the energy producers, big scale, and distribution networks themselves. The company I've chosen is a company called FCEL Energy Inc. It's been around since 1969. They specialize in electrolysis through fuel cells by converting byproducts of outputs from various other industrial processes to produce electricity for the general grid. As usual, what we'll do is we'll use strengths, weakness, opportunities and threats analysis, that's SWOT analysis, to determine the value of this company and whether it's worth investing in as a commercial trader. More on that shortly, but first a word from our sponsors. This company has been around since 1969, so there is some engineering pedigree within this company, which is really important, I think. It has multiple engineering projects all over the world, although it is mainly California based. It has the capability of on-site generation or storage units, storage that includes hydrogen, which is quite useful for the future of our planet and our transport networks, which a lot of time will be moving between electricity and hydrogen fuel. Given the nature of what this company does, there's very little controversy around the various projects they do. There's no kind of protests against oil production or any kind of threat to the environment, since basically it's trying to clean up the environment by using the effluent, let's say, so that's the excess fuel, excess gas of various other productions, either through factories, hospitals, other energy producers, and producing electricity off the back of that, or even storing it in the form of hydrogen. I think this is quite a good strength for a company to have, and one that's very important for the future. Now, the weaknesses of this company are twofold. There's one from an investor's point of view, which is looking at the balance sheets, it's looking at the share prices, and as with most tech companies over the past 2 years, the share price is down quite significantly. So as a value investor, you've got a reasonable chance of getting your money back, but it's not going to be anytime soon. That's not just because of this company or anything this company is doing wrong, particularly with regards to the shares. It's merely because the investment and the cash isn't out there at the moment. The balance sheet is quite reasonable. Normally anything above 2 on a quick ratio would suggest that they're not investing anywhere near enough, which is quite common for a lot of tech companies following the COVID fiasco. But if it was anything under 1, I would be panicking, suggesting that they were about to default on their debts. Clearly this isn't the case, although the cash revenue could be better. Most companies are in that situation. From an overall point of view of what they're doing, the projects are small, but that's the nature of what they do. And they're few and far between. For a company of the size it is, I would have thought it would have grown a bit further. This might change as the green agenda strengthens and increases across the planet, and more countries come to companies like FCEL Energy and ask for further investment. So that is the opportunity of this company, is to start to expand, start to license out some of their technologies to other companies, which I'm sure they do, but I couldn't find anything in their paperwork that they were doing that. It's their projects to need to go out to other places and take advantage of the world's green agenda. Now obviously America has recently put through an inflation act, which has a large chunk of the green agenda based in the middle of it, to expand to green cars, to increase the networks available, so that there's less reliance on petrol or diesel or gas if you're watching this in America. More on that shortly, but first a word from our sponsors. But as with any company, there are threats, and the threats to this are solar panel, their wind power, they're all the renewable energy sources that we've all been talking about for the past 3 or 4 decades. Fuel cell energy fits into a niche within that of taking byproducts of other companies and turn them into electricity. Fantastic for cleaning up our cities, fantastic for cleaning up our decayed infrastructure, which it is decayed everywhere. But I'm feeling that the other clean air technologies that are out there will probably put more pressure on this company to find other ways of using the fuel cells in such a way that they can store and produce electricity without using those other companies. How they do that, I don't know, and whether it can expand is also unknown. Okay, so if I did a rating system, I would probably give fuel cell 3 out of 5 stars, but I don't. So here's my conclusion. I think the company has potential to fill in the gaps where others are failing, to bridge that gap between the old energy system, which is polluting and full of carbon dioxide and a detriment on the environment, and the new green technologies which are coming online, and the new services that will go along with that. That means investing. Can't invest because there's a lack of money out there at the moment, because we're in the middle of a colossal inflation boom. So I think this would be one of those companies that you would invest in long term. That's reflected in the share price, which is currently trading at around $4 per share. So it's entirely up to you. This isn't a recommendation, this is merely my opinion, so I will see you on the next video.